What if I told you there was a new supercycle that is rapidly re-emerging in the stock market right now in 2026 and is still largely missed by a lot of investors? But something is changing. Analysts have issued some of the biggest price targets to date, and one institutional investor has increased their position by over 1800%. In today's video, I'm going to talk about Amprius Technologies. This is a stock that I have mentioned a lot on this channel, going all the way back to when it was just a penny stock over 2 years ago, but today this sits at $12. As we can see here, this stock has been huge over the past year, reaching as high as $24 before pulling back. And although Amprius has gained roughly 40% in the past 2 weeks, it's still a long way below its high. We could still be at the beginning of a major super cycle, and this needs to be taken seriously. Now, we've got a lot to get through in this video, so I will try to keep this intro short, but if you find any value in this, can I ask you to smash the like button? It takes a lot of time to make these videos, but it literally takes 2 seconds and costs nothing to smash the like button, and it helps the channel out so much. I'm aiming to get 500 likes on this video. Help me hit that goal. Subscribe to the channel if you're new and hit the bell notification so you don't miss out on any new content like this. I want to point out that I'm not a financial advisor and this is not financial advice, so always do your own due diligence. Now let's get into it. First of all, what is Amprius Technologies and what do they do? Amprius Technologies is a leader in advanced lithium-ion battery technology, delivering high energy and high power silicon anode batteries with up to twice the energy density, range, and flight time of conventional graphite battery cells. They operate in several markets, such as aviation, robotics, and e-mobility. Amprius operates an R&D lab and pilot manufacturing facility for silicon anodes and cells. To support scalable production, the company employs a contract manufacturing strategy, enabling rapid capacity expansion with minimal capital investment, while maintaining a global manufacturing capacity through its partnerships across Asia and Europe. Their SiCore batteries are considered best in class and set a new standard in electric mobility with industry-leading power-to-energy performance. Looking at the charts, we can see that Amprius had been on a very strong rally over the past 2 weeks, gaining about 40% after hitting this support level. But it still has quite a bit to run before we start to hit resistance. These levels have been tested several times over the past year. Now, Amprius was only $1 when I first called it out here on the channel, and I know a lot of you guys have been buying in that time. So with Amprius now having bounced off its lowest level in almost a year, what are you doing right now? Let me know in the comments. For me, this chart looks really bullish right now. Not as bullish as it looked a few days ago, but a good catalyst could send this stock flying. President Trump just announced that the administration has committed more than $2 billion to companies producing batteries and critical minerals, saying the aim was for such products to be mined, refined, and made in the USA. The largest single piece is a $1.4 billion Defense Department loan to silicon battery developer Sila Nanotechnologies, alongside a $400 million loan to Sunrise Energy Metals for scandium production. The government is to take priority purchasing rights over output from some of the projects. Now, companies mentioned in this commentary include none other than Amprius Technologies. It does say clearly here that the $2 billion is made up of 3 loans and a 4th equity stake. Absolutely none of the $2 billion is in the form of grants. The agreements have not been fully finalized and projects could take years to reach production. However, this is a sign of just how important this sector is right now. And that's what's really important. Not that any individual company has got a loan or a grant, but that the overall industry is worth funding with billions of dollars. As it says here, American Battery Technologies Company is the clearest list of expression of federal money flowing into domestic battery minerals. While Lithium Americas shows just how far federal involvement really goes, where the DOE has taken a 5% equity stake of the company, and the company has drawn down over $1 billion in the past year. While Amprius Technologies is the closest listed analog to Sila Nanotechnologies, the private company that received the largest piece of the August 7 funding. Amprius's high-density lithium-ion batteries is the same silicon anode technology that the Defense Department has just backed with $1.4 billion. And while Amprius is not profitable yet, which we will look at in just a moment when we look at the earnings report that they've just released, the stock has gotten buy ratings from Oppenheimer and Roth MKM in the past week. But these are not the only analysts rating Amprius Technologies as a buy. Looking at MarketBeat, we can see that Amprius Technologies is rated by 11 Wall Street analysts. There is a consensus price target of $23, while the high target is $33 and the low target of $17 is still far above the current price. There are several 5-star analysts giving buy ratings in the past week alone, with ratings such as this $30 target from Josh Sullivan of Jones Trading, a 5-star analyst with a 70% success rate. But there is a lot of institutional activity happening around this stock too. If we look at Fintel, the ownership flow is dominated by buyers. Institutions are holding roughly 76% of total shares, and institutional ownership is at an all-time high, having taken another huge jump in the past 2 months. BlackRock, the company's largest institutional holder, recently increased their shares by 22%, while Jane Street took a huge position in Amprius stock last quarter, increasing their shareholding by a whopping 1,800%. But it's important to understand why Wall Street has become so bullish on Amprius Technologies recently. Last week, Amprius announced their second quarter 2026 financial results and business highlights, where they announced record revenue of $34 million, an increase of 126% year over year, a gross profit of $9.3 million, which is a 593% year over year increase. They improved their gross margin from 20% in Q1 up to 27% for Q2. And while this is not a profitable company, as they are scaling up, they are also narrowing their losses. But it's their business highlights and financial outlook that have really stood out. They established multi-year supply agreements starting in 2027 with Stark Future, a Barcelona-based manufacturer, representing total revenue opportunity exceeding $100 million. They were awarded a $24 million order from a major European drone developer. They supplied Redwire with Sycor cells for the Stalker Block 30, while expanding the company's network and enhancing the company's ability to scale up. But importantly, they have raised their full-year guidance once again, from $130 up to $140 million, while issuing new guidance around their gross margin, expecting it to be at least 28%. All of this while they edge closer to profitability. Now they expect a loss for the year of just $10 million, while their net loss per share is expected to be under 8 cents. And we can see all of this very clearly when we look at the financial statements. Their balance sheet is a lot stronger this year than it was last year. Liabilities have decreased and there is practically no long-term debt. While their income statement, we can see the huge jump in revenue and that switch from a gross loss to gross profit. And while their operating expenses have increased, their overall net loss has decreased significantly, with loss per share dropping from 13 cents down to 7 cents for the first 6 months of this year. But guys, what do you think? Amprius has been one of the best performing stocks on the market over the past 2 years, going from under $1 up to over $24 this summer. The stock has pulled back a lot in the past few weeks and has provided a huge opportunity now, with the company outperforming on its previous expectations. This is a company that has raised its revenue guidance twice this year already, back in May and again in August. They are improving on their margins, they are narrowing their losses, and they have big plans in a sector that is set to get even bigger. Last year, the revenue for this company was $73 million. This year, they're projecting $140 million, and their target for 2030 is over $600 million. Let me know your thoughts in the comments below, and always do your own due diligence. Remember that I'm not a financial advisor, but if you enjoyed this analysis, then please like and comment. Follow me on X, and I'll catch you in the next video.